The live intraday price for NUBURU, ticker BURU, is currently $0.20 as of 12:07 p.m. EDT on Wednesday, April 15, 2026, marking a 2.68% move to the upside in the session so far. While most people see a penny stock struggling to keep its head above water, the reality under the surface is far more aggressive. NUBURU just accelerated its joint venture with Maddox Defense into a funded prototype phase, specifically aimed at the $20 billion counter-drone market. This isn't just about a laser company trying to find a niche anymore. It's about a massive transition into a defense contractor role. They're targeting a U.S. government demonstration in the very near term, which is the kind of catalyst that usually sends small-cap stocks into a different atmosphere. If you've been looking at this as just another manufacturing play, you're missing the shift toward directed energy and electronic warfare that is currently being priced in by those watching the order book rather than the ticker tape. When you look at the general market narrative for NUBURU, the expectation is one of caution. Retail investors on platforms like the Robinhood app or those using online investing tools often see the low share price and assume the company is failing. The common belief is that the February 2026 public offering and the subsequent reverse stock split were signs of a company on its last legs. However, the reality is that these moves were part of a deliberate recapitalization plan led by Alessandro Zamboni to clean up the balance sheet. They've already wiped out over $8 million in liabilities and increased their cash position from practically nothing to nearly $25 million in just 1 year. While the crowd is worried about past dilution, the smart money is looking at the acquisition of a 70% stake in Tekne, an Italian firm targeting nearly $60 million in revenue for 2026. This contrast between the struggling startup image and the rapidly scaling defense platform reality is where the opportunity currently sits for those who know how to self-investing effectively. If you're using investing sites to track volume, you'll notice that NUBURU has seen massive spikes recently, often trading tens of millions of shares in a single session. This isn't just retail churn. Institutional interest is beginning to peek through as the company targets a positive shareholders' equity milestone by the end of Q2 2026. For a company that was facing delisting threats and financial instability a year ago, hitting equity positive status would be a massive signal to the broader market and could open the door for inclusion in more Fidelity ETFs or specialized sector funds. People often compare these small-cap moves to the volatility seen in Tesla stock or Nvidia stock, but the mechanics here are different. This is a micro-cap turnaround play where every individual contract, like the recent order from a Tier 1 defense organization in the Asia-Pacific region, represents a significant percentage of the total market cap. One thing that doesn't get enough attention is the company's recent entry into the Ukraine industrial deployment platform. Through their alliance with Tekne, they are starting production of the Gralian platform. We're talking about a framework that targets an annual program scale of up to 120 million euros. When you stack that against a market cap that currently sits around $31 million, the math starts to look very disconnected from the current stock price. Most traders on the SoFi trading platform or interactive brokers are focused on the daily swings, but the real story is this transition toward recurring revenue through software and mission-critical defense hardware. They aren't just selling lasers, they're selling a SaaS operational resilience platform through their control of orbit. This shift toward high-margin, licensable technology is exactly what helps a company move away from the penny stock stigma and toward a professional individual brokerage valuation. Speaking of your own portfolio, I want to hear your strategy on this one. Comment below how many shares of NUBURU you currently hold, or if you're waiting for the Q2 equity report before jumping in. To understand why this matters, we have to look at what NUBURU actually does. Their core technology is the high-power blue laser. For years, the industry relied on infrared lasers, which are fine for many things but terrible for highly reflective metals like copper and aluminum. Those metals just bounce the infrared light away. Blue lasers, however, are absorbed at a rate that is much higher, sometimes up to 20 times better. This makes them the perfect tool for battery manufacturing playing in the EV space, consumer electronics, and now directed energy weapons. If you're looking for investment help on why this technology is a big deal, think about the global push for electrification. Whether it's companies making parts for Apple stock products or the next generation of power grids, they need to weld copper quickly and without defects. NUBURU's lasers do that better than anything else on the market. Despite the technical superiority, the road hasn't been smooth. The company spent years in the development phase, burning through cash and frustrating investors who were using Robinhood investments to catch a break. They had to deal with patent litigation and the constant pressure of maintaining their listing on the NYSE American. But the 2025 Form 10-K showed a business that finally started to catch its breath. Total assets jumped from $7 million to nearly $50 million. They've moved from being a pure R&D shop to an integrated global operating profile, with manufacturing infrastructure now active in the U.S. through the Maddox Defense JV. This is the part of the business model that usually gets ignored until the revenue numbers actually hit the quarterly reports, but by then, the stock has already made its move. Looking at the immediate future, there are several catalysts that could break the current price ceiling. First, there's the independent Italian regulatory approval for the Tekne acquisition, which is expected by the end of April 2026. If that goes through, NUBURU instantly gains access to an established European defense ecosystem and a massive jump in pro forma revenue. Second, the upcoming demonstration for the U.S. government regarding their counter-drone technology is a make-or-break moment. In the current global climate, portable directed energy systems that can dazzle or disable drones are in high demand. If NUBURU can prove their system is field-ready, the $6 million pipeline they've reported could easily turn into $60 million or $600 million over the next couple of years. However, we have to stay grounded in reality. The risks are still very real. While the balance sheet is better, they are still a small player in a world of giants. They're competing for talent and contracts with massive defense firms. There's also the risk of further dilution if the revenue ramp-up takes longer than expected. Investors using Fidelity Brokerage or Schwab Intelligent Portfolios need to recognize that this is a high beta play. It's not a set-it-and-forget-it index fund. It requires a level of active monitoring that you typically don't need for something like Fidelity mutual funds or broader Fidelity IRAs. You have to watch the contract wins, the regulatory filings, and the institutional flow on the Interactive Brokers platform to see if the big players are actually sticking around. The expectation was that NUBURU would disappear or be bought out for pennies. The reality is that they have fought their way back to a position of strength with a cleaner balance sheet and a clear path to defense sector revenue. They have successfully shifted from a manufacturing-only focus to an integrated platform that includes hardware, software, and electronic warfare capabilities. This divergence between the public perception of a struggling laser company and the operational reality of an emerging defense contractor is the most compelling part of the BURU story right now. Whether you're doing your own online investing through the Robinhood app or managed through Fidelity Wealth Management, this is a ticker that demands your attention because of the massive gap between its current valuation and its recent strategic wins. In summary, NUBURU is at a critical inflection point. We've seen the live price at $0.20, reflecting a small intraday gain, but the real movement is happening in the boardroom and the manufacturing floor. They have survived the worst of their financial crisis and now are positioning themselves for a 2026 that looks radically different from 2025. By focusing on the $20 billion defense market and clearing the path to positive equity, they are making a play for institutional legitimacy. The contrast between the cautious market expectation and the aggressive operational reality is what defines this stock today. Keep an eye on that Q2 equity target and the Tekne approval. Those are the signals that will tell us if this turnaround is the real deal or just a temporary bounce in a long-term struggle. Maintain your focus on the data, stay skeptical of the noise, and always look for where the reality is quietly outperforming the expectation. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video? Comment your thoughts. share with your friends, subscribe for more updates.